Good afternoon everyone and welcome to the Governance and Audits and Standards Committee meeting. I'm Councillor Ian Holder, Chair of this committee. I'd like to draw your attention to the following some housekeeping rules. If the continuous fire alarm sounds, please evacuate the room and public gallery by the stairwells. Do not attempt to use the lifts. Please assemble by the statue of Queen Victoria in Guildhall Square. In order to comply with the Guildhall Trust Fire Marshal regulations, if you sign into the Guildhall, please remember to sign out when you leave the building after today's meeting. May I draw everyone's attention to the fact that this meeting will be live streamed. Can I please remind all attendees to turn the microphones on to speak, then off again once you've finished speaking. Members of the public are also permitted to record the meeting on the understanding that it neither disrupts the meeting nor records those stating explicitly that they do not wish to be recorded. Please be advised that the public seating area is not in view of the camera used to webcast this meeting. Please can I ask members and officers to introduce themselves, starting to my left.
Councillor Graham Heaney, I'm standing deputy for Councillor Julie Smythe, who's given her apologies.
Councillor Stuart Brown.
Councillor Russell Simpson.
Councillor Spencer Gardner.
Andrew Britton, External Audit EY Partner.
And Kelly Gates, External Audit Manager.
Helen Clem, Finance Manager, Technical Financial Planning.
Karen Thomas, Treasury and Tax Accountant in Technical and Financial Planning.
Steve Belshaw, Group Accountant, Technical and Financial Planning Team.
Richard Webb, Deputy Director of Finance.
Helen Magri, Data Protection Officer.
Paul Somerset, Deputy Chief Internal Auditor.
James Harris, Senior Local Democracy Officer.
Thank you. The only apologies we've received were from Judith Smythe, and I think Susie possibly going to be late. Declarations of interest. I've got an interest to declare as my wife is personal advisor in the Children's, Families and Education Directorate. Has anyone else got any declarations? No. Thank you. Item 3 on the agenda. Minutes of the meeting held on the 21st of January 2026. Are members happy that I sign the previous minutes as an accurate record? Thank you. Right, I'll move on to the main agenda. We're going to slight shuffle round. Item 9 is going to come first because Helen's only got the only item on the agenda, so we'll let her escape early. So, item 9, Data Security Breaches Report. Helen Magri, Corporate Information Governance and Data Protection Officer, is in attendance to introduce the report and answer any questions. Helen, over to you.
Thank you. So the report covers the period from July 2025 to January 2026. So that was the last time that we reported to this committee. There's nothing unusual in the numbers or the trends at all. Although there were 67 breaches reported to the Corporate Information Governance team, none of those reached the threshold for reporting to the Information Commissioner's Office. As always, we work with the teams where the breaches occurred and look to identify what the root cause was, what could be done differently to prevent something similar happening again, and changes are made where possible. You'll see, as is always the case, the majority of breaches are as a result of emails being sent to the wrong recipient, and quite a number of those are to the wrong internal recipient, so there are quite a few where information hasn't actually left the authority, but we would still consider that as a data security breach. So hopefully you've had a chance to have a look at the report, but there's nothing really of note. But if you have any questions, be happy to answer any.
Thank you. Susie, do you have any declarations?
No, apologies for lateness. My previous meeting went on. No declarations of interest. Thank you.
Thank you. Members, any questions? Councillor Heaney.
Yes, thank you, Helen. I just have a couple of questions about the classification of the incidents. I mean, most of them are down to human error, as it says. On page 168 and 169, one is down as training, but it says there an incorrect address held on the system. So presumably that was an input by somebody. So there was probably some human error there. I'm not quite sure why it's called training. Yeah.
Sometimes it will fall between two different areas, but that was identified as a training need because the member of staff was very new in that case. So it was a matter of them perhaps needing a bit more training about when to update addresses on the system. So we try to sort of put it in the overriding category, but you're right, I mean, it was human error as well.
And the other one was at the bottom of page 169, which is system error. Unintended recipient CC'd into email. So it wasn't a person who did it, it was the system who did it.
I think there was an incorrect setting on the system when we had some consultants doing some work. So it wasn't, I guess it was human error as well. Yeah, I mean, it's difficult to categorise them sometimes, but yeah, perhaps both.
Curious that there were only two that didn't have human error. I was just curious
okay.
to why they were the only two that didn't have human error, and I wasn't quite sure how that had been classified. That's a suitable explanation, so thank you for that.
Thank you. Members, any more questions? No. No, in that case, thank you. You escaped early. Members, it's recommended that the Governance, Audits and Standards Committee notes the breaches that have occurred between 1st of July 2025 and 30th of January 2026. Is the report noted, members? Thank you.
We also have identified that there aren't any trends or any further actions required. So I think that's also important to know, because it does actually ask us whether we are to determine that. And I think we determine, because they are individual instances, there aren't any identifiable trends or any further actions. So we probably ought to include that as well as our recommendation, if that's okay.
Yeah, that's fine.
Thank you.
Right. Back to the agenda. We go back to item 4, the 2024-25 Audit Results Report, year ending 31st of March 2025. So Andrew Britton and Kelly Gates from Ernst & Young are in attendance to introduce the report. So over to you.
Thank you, Chair. I'll take the report as read, but I'll highlight a few key points from within the executive summary, which starts on page 15 of your packs. So with the context of the previous discussions we've had about MHCLG's measures to clear the audit backlog and how assurance from previously disclaimed audit reports will be built back, there's a reminder of that process in here. And as we set out here for 24-25, we've considered the form of our audit report and whether a qualified opinion is an option rather than a disclaimer to the accounts, which was the opinion given in the prior year. It's a live process involving technical consultations, and hence why there is no wording of the for the opinion in this report, despite the audit being substantially complete. So, as an update to what we've written on page 15, pleased to say that we have now completed all of the technical consultations, and we do expect to be able to issue a qualified opinion on the council's accounts for 24-25. To just point out that this visibly reflects the progression that we have made with rebuilding the assurances since the original disclaimer, and that the Council have engaged and supported the audit process, albeit with improvement recommendations reflected elsewhere in the report, which I should state is comparatively not always been the case across the sector from our experience. So just for members to note that. Equally, I should point out that the move from disclaimed to qualified is consistent with the timelines set out in the published guidance issued by the National Audit Office in what's referred to as LARIG 01, and we've included that in our report in the Appendix A, which is on page 60. That says that there is a potential for a qualified opinion this year, although a disclaimer is more likely. So, as you can see, that keeps you well on track with the illustrative rebuild programme. In terms of the status of the audit itself, as I said, substantially complete, and Kelly will update on the specific conclusions in terms of our areas of focus since submitting the report for papers. But just to highlight in Appendix B, which is on page 61, that shows the areas of the accounts which we expect to be able to provide substantial, partial or no assurance on as a result of our work. This is a build on what we shared with you last year. And we were able to, and you'll see that we were able to build back some assurance this year, and it's a process that obviously will continue in 25-26, in line with the guidance issued by the National Audit Office, as I said, as illustrated in Appendix A. Clearly, we'll provide more information on how that will work as part of our audit plan for 25-26. I'll pause there and hand over to Kelly just to talk through some of the updates in terms of the conclusions to our work. Kelly.
Thank you. As Andrew said, I'm going to run through the risk areas and areas of focus of the audit, including results of the testing performed, the unadjusted misstatements, and then the assessment of the control environment. So I'll start on our risk of management override of controls. This is the risk, just as a reminder, that's identified on every audit engagement and relates to the fact that the financial statements as a whole are not free from material misstatements, whether caused by fraud or error. So at the time of writing the report, we noted that our work in relation to this was still ongoing. I can now confirm that the work is fully complete in this area, and we've not identified any evidence of management override or any instances of inappropriate judgments being applied in accounting estimates. The next risk is in relation to the inappropriate capitalisation of revenue expenditure. We note in our report that the work in relation to this risk is complete, and we've not identified any material misstatements in our testing of property, plant and equipment additions or our REFCAS testing. However, just to note on this one, as part of our testing on another area in relation to assets under construction, we did identify a £6.6 million balance held within assets under construction that should have been recorded in REFCAS throughout the year. And we note that this hasn't been adjusted for in the final version of the accounts, but management have said they'll update this in 25-26. We also noted a misstatement in the classification of PPE additions from assets under construction to council dwellings, whereby £2.3 million of council dwelling additions were still included within assets under construction balance at year end. We note that it's a classification error within note 12 of the accounts and does not impact the property, plant and equipment balance in the balance sheet. Again, we note this has not been adjusted for in the final version of the accounts. The next risk is in the inappropriate recognition of trading and investment property income. We have completed our testing in this area and have not identified any misstatements to bring to your attention. So, this then takes us on to the risk of valuation of investment property and land and buildings using existing use value and the fair value method. For investment properties, neither the testing performed by the audit team or by our EY real estate specialists have identified any misstatements that we need to bring to your attention. In our report, we noted that this was subject to final review, and I can now confirm that final review of this has occurred and that testing in this area is complete. For existing use and fair value assets, our real estate team identified one asset outside of their supportable range. It's noted in our report that we still had a query on this with management in relation to this asset, but this query is now closed and the final misstatement in relation to the asset is an under misstatement of 1.7 million. This is due to an incorrect land area being used in the valuation calculation, and we note that management have adjusted for this in the final statement of accounts. The next area relates to the valuation of the Lakeside North Harbour asset. Our EY Real Estate's team have performed a review of this asset and have concluded that the value falls within their expected range. This has now been through final review, and we can confirm that it is as per the report and there's no misstatements to bring to your attention. The next area relates to the pension liability valuation, and we note that following the production of the draft statement of accounts, the actuary identified an error in the investment return figure that they'd used in their calculation, which meant that management received an updated IAS 19 report from them. These figures have been updated for in the updated statement of accounts to reflect this updated report. It's not resulted in a change to the underlying net position. However, an £11.7 million adjustment has been made to the associated disclosure notes, but no other misstatements were noted in relation to the pension valuation. We then have the risk in relation to the valuation of land and buildings valued using depreciated replacement cost and the housing revenue account properties. So we note in our report that we've stated that it was subject to final review, and this final review has now taken place. As a result of our testing, we've identified an overstatement of the Hillsey Lido asset of £4 million. This was as a result of the asset being valued as a fully operational asset with no obsolescence, despite it being non-operational at the year end. The unimpaired capital works in relation to this of £4 million were also included within assets under construction, which meant these were being accounted for in both operational land and assets under construction. So we note management have adjusted for this in their updated statement of accounts. In addition to this, and as noted in our November progress report that we presented, we have identified a prior year adjustment in relation to PPE valuations. This is due to a group of assets being revalued using depreciated replacement cost in 24-25 for the first time. We note that these should have been revalued using the same basis in 23-24, and this would result in an increase to the prior year balance of around £30 million. Management have confirmed that this has not been adjusted for in the updated statement of accounts. And in our report, we stated that this would impact the opinion on the accounts, but at the time we were going through internal consultations in relation to this. I can confirm now that we've completed that consultation, and it doesn't impact it forms part of the opinion, but doesn't impact the outcome of it. As Andrew sort of said, we've gone for a qualified rather than disclaimed opinion. In relation to council dwelling valuations, we've now completed all final review of this area and confirmed that the only issue identified relates to the identification of 2 beacons, which we were unable to verify that these had been formally revalued in the last 5 years as required by the SIPFA code. We note that these have been included in 25-26, and we've been able to perform an assessment to prove that they haven't caused a material misstatement in the 24-25 accounts. The next area of risk relates to the implementation of IFRS 16 in 24-25. We note that SIPFA code required all authorities to implement this from the 1st of April 2024. Management's assessment of IFRS 16 concluded that this was not material to the accounts, and therefore they have not applied this to their statement of accounts. Our work has therefore concentrated on the completeness of leases identified by the council in their assessment, as well as the accuracy of the calculations performed by management. We focused our work in 2 areas when completing this testing. First, on IFRS 16 in relation to previously classified operating or finance leases, and then IFRS 16 in relation to PFI arrangements. In relation to our work on the previously classified operating and finance leases, we're able to agree with management's overall assessment that this was not material to the accounts. We have, however, noted that there are some adjustments which fall higher than our sort of trivial reporting threshold. So if the council had chosen to apply IFRS 16 to their accounts, there would be an increase to property, plant and equipment, including right of use assets of 2.9 million, an increase of 3.1 million to other long-term liabilities, and a £0.2 million increase to expenditure. In relation to IFRS 16 on PFI arrangements, we engaged with our internal specialist to help us review this, and we're currently just waiting on their final output from them in order to conclude on our work in this area. So although we haven't received the final report, I have had discussions with them, and they have indicated that there's no issues in their findings. So the penultimate risk area is in relation to the group accounts assessment. We've concluded our work on this, and we're satisfied that management's assessment that no group accounts are required for 24-25 is accurate. And then our final risk area relates to the restatement of the comprehensive income and expenditure statement due to the council changing its internal reporting structure in 24-25. So we've completed our work in this area, and the review on this area has now been completed, and we have no issues to report in relation to this. Okay. Section 3 of the report. This shows our work performed in relation to value for money in 24-25. We have identified one area of significant weakness in relation to the self-referral to the regulator for social housing and subsequent regulatory judgment. The regulatory judgment issued to the council in January 2025 resulted in a grading of C3, which indicated there are serious failings in the landlord delivering the outcomes of the consumer standards, and significant improvement is needed. This was reported to as part of our progress report in November 2025, and there has been no change to our assessment since then. We note that the council is working with the regulator to rectify the issues that were identified. So next, I'm just going to talk through the misstatements identified as part of the audit, a few of which I've touched on already as I've run through the specific areas. So at the time of writing the report, we hadn't received the updated statement of accounts from management, and therefore were unable to confirm which misstatements had been adjusted for and which hadn't. So we have now received this and are able to confirm that the misstatements shown on page 44 of our report have been adjusted for in the updated statement of accounts, and the ones shown on page 45 remain unadjusted. The unadjusted misstatements are made up of the 6.6 million overstatement to property, plant and equipment previously discussed, the adjustments previously discussed in relation to IFRS 16, and a projected misstatement of 2.117 million in relation to recognition of expenditure in 24-25, which actually related to the prior or next financial year. We note that this last misstatement is a projected error, which means we identified an actual error of only 2,000, but it's been projected across the entire expenditure population. We note that there are 2 unadjusted disclosure misstatements. First is a projected misstatement of 2.2 million in note 12 of the accounts, which is the property, plant and equipment note. There is an overstatement of this amount in relation to gross book value of the gross book value of assets and accumulated depreciation. This is primarily due to identifying an asset within the fixed asset register that no longer exists. This asset had a value of £55,000, and again that's then been extrapolated over the population. The second relates to the overstatement of assets under construction and understatement of council dwelling additions within note 12, as I've previously highlighted. The last section I'm going to touch on just before handing back to Andrew is just in relation to the assessment of the control environment. The detail of this is shown in section 6 of our report. In 24-25 we've identified 9 control recommendations across the various areas of the statement of accounts. A few of these I've touched on throughout what I've said already, and I'm not going to sort of go into these in detail, read them off to you in detail now, but management have shown their responses in relation to these identified control recommendations in section 6. Now I'm just going to pass back to Andrew just to finish off.
Thank you, Kelly. So just wanted to highlight one more thing to you. In addition, this year we're providing some additional information in relation to your oversight role as a committee. In light of the government's proposed reset and recovery programme for the local audit regime to address the backlog, we've taken the decision to highlight where all audit bodies are, in our view, in relation to their ability to support an efficient and effective external audit across a range of relevant measures. So on pages 22 to 24, we flesh that out. By being transparent as to the elements of the audit that could be more efficient, we aim to collaboratively work with the Council to improve the way the 25-26 audit works, and because we're all very conscious that in 25-26, the backstop date, which this year is the end of February, will next year be the end of January 2027. So you'll see that as EY, we're choosing to do this by means of a RAG rating assessment. Before we all get too excited about the rating system, I should say that these are judgments that we've made as a team with the benefit of having seen a wide range of responses to the external audit process. It's a mechanism as a firm we've chosen to use on a consistent basis. It's not a formal assessment. I'm very conscious that the words requires improvement has certain meanings in things like Ofsted and CQC, etc. So this is more of an aid memoir to support those discussions as to how we do things better. And whilst we're content that most of the areas for Portsmouth we see as important in supporting an effective audit, and so therefore in the report are green, there are a few which you can see where we see there is a scope for improvement, and we'll pick those up as part of the wash-up process from the 24-25 audit as we start to plan for 25-26. Happy to pause there, Chair, and take any questions the committee may have.
Thank you. Members? Councillor Simpson.
One specifically, actually, on page 18, significant risk number 5, valuation of Lakeside North Harbour asset. I'm just curious. It said the site was reviewed by our EY real estate team, that they concluded that the asset was within expected valuation range, and therefore the asset is fairly presented in the financial statements. Does that include potential leases, rents and rates lost, potentially lost from that not being rented out? Because I know that we have quite a lot of office space that's empty, and when we talk about value of money, well, you want, if you've got a big lakeside building, you want good value of money, don't you?
Of course, yeah. So they look at all the they look at all the inputs that go into the calculation, which includes the rent and any of the units that are vacant possession and things like that. So all of that will be considered in their calculation.
So I think I read somewhere, I was skimming through it, 2020 I think we acquired it, I think that's right, around about that date of time. The question is, it's 6 years, I know this is only to 2025, but when we have this next report, and this is going to come up again, if we still have as many offices empty and we're paying the rates on that, or leases, other leases have been given up and we're having more empty spaces and paying the rates on that, will this come back up knowing that it's, not say running at a loss, but could be healthier? if that makes sense.
Yes, so a couple of things, and I think there's probably officers may want to comment as well. So the way that buildings are valued is in line with the RICS guidance for valuation. So it's based on the facts at that point in time, at the balance sheet date. In terms of the strategy for empty properties, etc., then that's probably something for officers to address rather than the auditors.
Yeah, I don't think that's something we can address, but I think that's something that the property investment team may need to pick up with you. But I will flag
Okay,
that.
I was just under the impression that it was potentially being included within the audit. That's the reason I mentioned it, but maybe it might be for the next one.
So to the extent there are leases in place and that contributes value to the property, or as we said, if there is empty space, then that gets taken into account in terms of valuation, but obviously at a point in time.
Thank you. Members, any other questions? Sorry.
So I'm just going to pick up, I think the reason it's included is because of the value of the significance in the statement of accounts, and that's why the auditors are focusing on it. So.
Thank you.
Yeah, a couple of questions actually. It's referred to in two places, on page 47 and also on page 50. We talk about council house dwellings, and it talks about a beacon evaluation. I'm not quite sure what a beacon is. I thought it was a fiery thing on a stick, but that's clearly not what it is.
So the way that council dwelling valuations work is, obviously there's loads of council dwelling properties, and they are put into what are called beacons, depending on how many bedrooms they've got, their location, and things like that. And then how the valuations work is a property from that beacon will be revalued, and then that is applied to the rest of the properties within that.
That's very helpful. I had no idea what it was when I read it. At the bottom of page 51, there's reference to the members' register of interests, and it points out that the way in which we deal with that is raised as a bit of an issue about the number of times that members actually update it. Now, there is a requirement for members to update their interests within 28 days, and it is their responsibility. And as a newly elected member, you are immediately given the relevant paperwork and told that you need to do that. Are you therefore suggesting that the council needs to send out effectively a reminder to councils before the close down of accounts to say, can you please make sure that you've done all your register of interest? Is that what is being suggested there?
So what we see sort of in best practice terms is ahead of sort of production of the accounts and sort of looking at the related parties and register of interest is just sort of a reminder or a touch point with councillors and members, just to say, you know, is your register of interest up to date, or is there anything else that is missing? It's not a, you know, there is processes in place. It's just sort of a recommendation based on sort of best practice.
Just above that, there's a question about property, plant and equipment evaluations, and the management response is to disagree with you. Are you happy with the disagreement?
No, which is why we've included commentary on it in our opinion.
Thank you. Members, any more? In the RAG rating, unless you said not get too worried about the RAG rating, but there's about a couple of issues about the volume and value of the identified misstatements and the volume of misstatements and disclosures. Should we be concerned with the number of misstatements?
Yeah. So I think inevitably there will be differences that as external auditors we pick up. In fact, you'd probably be disappointed if we didn't. It's more the point about some of the ones that we picked up were things that we think could have been identified in advance of the audit. It's to go back to your comment on the it's amber, it's not red, so it's an area where we think there is potential for improvement, and therefore reducing the number of and potentially the size of those adjustments that we identify.
Thank you. So if there's no other questions, no. Where are we? Members, are we happy to note the report and the comments of the committee? Thank you. Item 5, Annual Government Statement. Paul Somerset, Deputy Chief Internal Auditor, is in attendance to introduce the report. Paul.
Thank you, Chair. So this is the final annual governance statement following the draft that was presented to this committee in September of 2025. I understand from Kelly there's been no substantial changes, so happy to take any questions.
Thank you. Members, any questions or comments? Graham?
That's me again. Page 91, the third paragraph from the bottom, talks about the council's financial position in relation to future years of deficit. And in fact, I think that is the reflection of what it was before the recent financial settlement, because I think it's now 1 million per year, not 3 million per year deficit. Is that right? Pretty sure. If I had a quick look at the budget. So I'm just wondering if we needed to adjust that.
So the latest budget report that's been published highlights that there's a deficit of 3 million by the end of 28-29, I believe, or 29-30, can't remember the final year now, which requires an annual savings estimate at this point of £1 million per year. So that's where that figure comes from that you mentioned. I'm not sure what's been updated in this report.
Members, any questions? Any other questions, comments? No. In that case, members, it's recommended that the committee agrees the annual governance statement 2024-2025 at Appendix 1 to the report. Do I have a proposer, please? Councillor Brown, seconder. Councillor Heaney. Is that agreed, members? Thank you. Right, on to item 6, Statement of Accounts for 2024-25, which is the agenda supplement. Richard Webb, Deputy Director of Finance and Resources, Helen Clem, Finance Manager, and Steve Belshaw, Group Accountant, are in attendance to introduce the report and answer any questions. Over to you.
Yeah, thank you, Chair. So I'm pleased to be able to present the Statement of Accounts to you for the financial year 24-25. As you've just had a very thorough update from the external auditors, I don't intend to take you through all of the accounts and adjustments, but there are just 3 things I would quite like to highlight, if that's okay. Firstly, we'd like to apologise for the late publication of the accounts for this committee and the papers on this agenda for this item. Unfortunately, with the audit work ongoing that you've just heard about, we were unfortunately unable to finalise the final position on the accounts until this week, and that's why the papers were slightly delayed. We were still responding to various queries, so apologies for that. We do hope the inclusion of the link in the agenda to the prior year or the earlier publication of the accounts, which haven't changed that significantly, was helpful to you. And as shown at item 4, whilst there's been some adjustments to the accounts, they've not resulted in any changes to the overall position of the income and expenditure account. That's the first point. Secondly, we're also keen to ensure that, as I say, apologies for the late publication, but we are keen to ensure that you get the papers in time to ensure that you can thoroughly review them in your role as governance committee. And we're especially important on the annual statement of accounts. Therefore, we have requested to meet with the auditors to have a further wash up and discuss opportunities to further improve the process for next year and to ensure that the deadlines can be achieved, although there are some changes to those dates. Interesting again. We'll also we've also spoken with the auditors, and we've got confirmation, I think it's confirmed, that you're starting the audit work earlier next year, or you're seeking to plan to be able to start the work earlier next year as well.
That's the plan at the moment.
Yeah. So hopefully all those things aligning, we'll be in a better position to report to you on a timely manner next year. And lastly, the Appendix 1 to this had a list of adjustments that we've put through. As the external auditors have highlighted, we've processed all of those adjustments, but on the list that we published as Appendix 1 to the report, there were 3 omitted items. We have got a new version to circulate to you, but we will ask that that's included in the minutes to this report. But happy to take any questions, and also before I finish, I'd just like to thank the team for all their hard work in producing these statements this year. So.
Thank you. Members, any comments or questions? Or do you want a minute to have a look at the...
So just to clarify, the items at the bottom, 15, 16 and 17, are the ones that have been added to that list. And they were the ones that were mentioned in the external auditor report.
Members, are there any questions, comments? No? No? Okay. In that case, where are we? Members, the recommendation is that the statement of accounts be approved and authority to be delegated to the Chair of the Governance, Audit and Standards Committee to sign and amend 2024-2025 statement of accounts after the 18th of February 2026, should this be required, following comments by the Auditor. Do I have a proposer? Councillor Brown. Do I have a seconder? Councillor Heaney. Is that agreed, members? Thank you. And we'll move on to item 7, Treasury Management Quarter 3 Review 2025-2026. Helen Clem, Finance Manager, and Steve Belshaw, Group Accountant, are in attendance to introduce the report and answer questions. Thank you.
Thank you, Chair. So this is the third quarter's Treasury Management Report and comes here for noting. We continue to operate within our limits. We've had no breaches as per the Treasury Management Policy, and we still continue to have sufficient liquidity, and so have not taken out any new borrowing. This is something that we monitor closely. Happy to take any questions you may have.
Thank you. Councillor Brown.
Thank you, Chair. Hi, Helen. As you probably know, I always make a comment about how far under our approved spending limit we are, but it seems to me from remembering figures from previous meetings that that's being used even less than in prior. Do we have any trend data on like how much of our approved limit we're actually using over time? Because that's, what, 63%? I remember it being more than that in the past.
I'll pass over to my colleague Karen.
Hi, yes, so the limits are set at the start of the year and are subject to what's planned in the capital programme in terms of borrowing. So as things progress, then the limits that have been set aren't changed, but our borrowing, we've not taken any new borrowing, so our borrowing position has reduced as we've repaid sort of some debt during the year. So that's the sort of the position as at quarter 3. And then as we look beyond that, so the next report being the policy, you'll see those limits, upper limits change for the additional borrowing in the capital programme and that comparison to the debt again. But yeah, it's more of a timing thing. We've got this position at the start of the year, and then the debt has changed slightly during the year. Okay.
Thank you. Members, any other questions or comments? Members, it's recommended that the Council's Treasury Management activities have remained within the Treasury Management Policy 2025-2026 in the period up to 31st of December 2025, and the actual Treasury Management indicators as at 31st of December 2025 set out in Appendix A be noted. Are these noted, members? Thank you. Right. On to item 8, Treasury Management Policy for 2026-2027. Richard Webb, Deputy Director of Finance and Resources, Helen Clem, Finance Manager, and Steve Belshaw, Group Accountant, are in attendance to introduce the report and answer questions.
I'm going to pass this over to my colleague Karen, who's our Treasury Management Specialist.
Thank you, and apologies. Thank you, Chair. I can confirm firstly that there are no significant changes from last year's policy, but as always in setting the policy, which includes the annual investment strategy, we're mindful of the importance of managing risk and ensuring that the policy enforces the principles of SLI, that is security first, then liquidity, and then yield last. Expectations around future cash flows form the basis of the policy. A lot of the indicators in the policy, so we take our cash flow expectations into account, and with this in mind for 26-27, we've set out our expectations for borrowing within the policy for 26-27 and beyond, and we've also revised some of the limits on our investments or where we place our investments to ensure they're appropriate to the levels of surplus cash that we may have available to invest during the year. Okay, so if anybody has any questions, happy to answer.
Thank you. Members, any questions? No. As you say, there's not been any major changes since last year. In that case, members, it's recommended that the committee notes the recommendations in section 3 of the report, which will be considered by Cabinet for onward recommendation to full council. Are the recommendations noted, members? Thank you. Item 9 we've done, so on to item 10, internal audit performance status report to 30th of January 2026.
Thank you, Chair. Members, this is the standard progress report we bring to Governance and Audit regularly. Nothing significant to note that I wanted to bring to your attention other than in page 183 we've had some changes to the audit plan, and then in section 8 of our report from 186 onwards, those are the audits we've completed since the last meeting. Happy to take any questions.
Thank you. Members, any questions? No. In that case, recommendation. It's recommended that members note the audit performance for 2025-2026 to 30th of January 2026. Members, is the audit performance for January noticed? Thank you. And then we'll move on to the item 11, internal audit plan for 2026-2027. Paul?
Thank you, Chair. So before you is the audit plan that we're proposing for 26-27. We've conducted our annual risk assessment and met with senior officers and the chair of this committee to discuss potential audit areas. And this is the audit plan we have devised for the future year. As I'm sure you're aware from previous years, while it is an approved plan, we are flexible with that plan throughout the year to meet the risk needs of the authority. So while this is the plan that we're putting forward to be approved, we will be monitoring it throughout the year and making any changes as necessary. Happy to take any questions.
Thank you. Councillor Simpson?
So just to confirm, it's almost like a scheme of work where even though it's an outline, but it isn't an actual set in stone. So if someone did want to bring something forward, it can be added. Just to confirm.
Yes, so it's a plan that we need approved, but obviously we're open to listening to senior managers and any concerns we have throughout the year. But ultimately, any changes to the plan would need to be our decision. But we're obviously happy to listen to any concerns that are raised and see whether that's something we would want to include in the plan.
Thank you. Councillor Brown?
Paul, are you and the team confident that the plan you've come up with covers all areas, all directorates of the council, but also addresses perhaps areas that have historically needed more work on audit to make sure that they've actually kept up with the recommendations and implemented the changes?
Yeah, so as part of our audit risk assessment process, we look at previous results in that area, how we've had in results to follow-ups, how exceptions have been implemented. That all goes into us trying to come up with what we think at this time are the high-risk areas that we're resourced to complete as part of our audit strategy. So we look to do around 20 to 25% of the audit universe on an annual basis. And at this time, based on our risk assessment, this is what we feel is the best areas to look at from an audit point of view to make sure the council is covering its major risks.
Thank you. Members, any other questions? No, in that case, it's recommended that members approve the proposed internal audit plan for 2026-2027. Do I have a proposer, please? Councillor Brown, and a seconder? Councillor Heaney, thank you. Is that agreed, members? Thank you. And so we move on to item 12, anti-money laundering and anti-tax evasion policies. Paul Somerset, Deputy Chief Internal Auditor, is in attendance to introduce the report.
Thank you, Chair. These are two policies that kind of form part of our overall anti-fraud, corruption and bribery suite of policies. They were due for an upgrade to make sure that we are up to date with any relevant changes in legislation. So we've made those changes to the policy, and we've also tried to make the policy a bit clearer to staff and have a more risk-based approach. Both policies also look to improve the reporting, and that reporting will be coming back to this committee on an annual basis. I will do my best to answer any questions on the policies. They are fairly technical and they were written by someone in our team, but I will do my best to answer any questions.
Councillor Brown.
So just to be absolutely clear then, any changes that have been made have been in response to legislative changes and not the whims of a director somewhere in the ether?
Yeah, correct. We were aware of some the main legislation change being the Economic Crime and Corporate Transparency Act. That's one we wanted to make sure that was included that wasn't in the previous policies. Obviously, we've also looked at the policies and best practice across other councils. We know we did a bit of research around to see what other councils were doing, see if we could improve some things, and that's where we've tried to strengthen up some of that risk-based approach, a bit clearer as to what people need to do reporting-wise, and then also making sure we're reporting on how those policies have been used back to this committee, so you have full oversight as if we do have any areas where we have had incidences, we're making sure we're reporting that back.
And is there a plan in train to actually train relevant members of staff on the changes on the policies to make sure they're implemented across each directorate properly?
Yeah, so following this, we have already been working on some e-learning updates that are currently under review to then make sure that the policies reflect the staff mandatory training that they will be doing when they do their anti-fraud and corruption training.
Thank you. Members, any other questions? Any comments? No, in that case, it's recommended that members approve the updated anti-money laundering and anti-tax evasion policies and reporting forms attached as appendices A, A1 and B, B1 respectively, and that the Chief Internal Auditor and officers nominated by her have delegated authority to make minor changes to both policies in consultation with the Director of Finance and Resources and the City Solicitor and Monitoring Officer. Do I have a proposer, please? Councillor Brown? Go on, Graham. Thank you. Is that agreed, members? Is that agreed, members? Thank you. In that case, thank you, members. That concludes the business on the agenda for this meeting. Thank you for your attendance and thank you for all the work you've done.